the banking system is going extinct. Just say it what it is. Nobody wants to say that. It's going away. And that's why I told my members, we're not touching these banks. I want nothing to do with them. The pattern is so bad. It's so broken. There is no reason to get involved in these names. We have no edge over that market right now. And I know some people on TV are saying, hey, the banking system is going extinct, like the way of the fake dinosaurs.
This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more.
And welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm your host, Kerry Lutz. We got Nick Santiago with us today. Nick, hey, first we'll do our daily market wrap up. It's actually three times per week, but and then we'll get into more of a macro type view of the world, the economy, etc. So first off, market's looking choppy today.
Yeah, the markets are very choppy today. And in fact, they've been choppy you can make a case for the last 6 weeks. You know, we go up for a couple of days, we go down for a little bit. But one thing I've noticed, Kerry, and this is something that should be very important to the listeners, is that the volume trends have been extremely light since late March. And that's what's helped keep these markets buoyant. A lot of people think when markets go up on light volume, that is just the retail investor or the retail trader pushing it up. But it's not. It's the institutional trader pushing the market up and keeping it up. And when you get selling pressure and you get high volume, say 100 million shares or more in the spiders, that's telling you there's real institutional sell side pressure on the market. If you don't get that, just expect the markets to remain buoyant. And, you know, I try to explain that a lot of times to my listeners, and they're almost like programmed to think that, oh, it's just the retail trader pushing the markets up. It's never the retail trader that ever moves markets. You could go back to the meme stocks and those Reddit boards. That's still institutional traders. So just remember, light volume keeps a buoyant upside market. Heavy volume, almost every time except at a major low, you're going to see downside action. Yeah.
We've seen that over and over past years that we've been doing the show. Exactly what you're describing. And light volume is easier to manipulate the market up or down for that matter.
Absolutely. And there's no selling pressure. So you only have to have, you know, a small buy program of S&P futures contracts to move the market any way you want. And now they got this ODTE, which expires the same day VIX. I mean, there's just so much manipulation going on here intraday. It's rather remarkable. I can't tell you how many times I see the markets have a hard sell-off, and then by 12 o'clock in the afternoon, 1 o'clock in the afternoon, they just float right back up to the highs like nothing ever happened. And that's why I always tell you, it's not how they open, it's how they close, and that's what you have to watch for.
Right. Hey, so Twitter, Elon has hired a new CEO for Twitter, and she looks to be I don't know what she is, but she's the former head of NBC Universal. So what's this about?
Well, I've been getting videos sent by her all day long. Actually started last night, and I must have watched 10 of them. So, you know, she was one of those people, mask up and ship out and all of this stuff. So I think Twitter's slowly going to revert back to the way it was. Elon came in, got everybody excited, thinking it's going to be a free speech platform. I'm not so sure of that. I wouldn't buy into that one. We'll see how she is when she gets on board, but I have to think she's a lefty all the way through and through. And, you know, again, all you want is just somebody to be fair. I mean, that's all people want. They just want, you know, somewhere where they can share and express their views without being shadow banned or without being blocked or, you know, but again, you know, all of these platforms have an agenda, if you ask me.
Yeah, no doubt. Well, hopefully it won't go back to the way it was, because whatever you say about Musk, his opening the platform up has led to higher and higher viewership and, more importantly, people spending more time on the site. And if they keep it open and they switch and start doing videos and video advertising, they will crush all the competitors just by being a free and open platform. So hopefully they won't revert, but I'm not convinced. The proof of the pudding is in the tasting, as they say. So energy today is looking better, huh?
Yeah, energy's firmed up today. I mean, we have some news out there. I think by the Department of Energy, they basically came out and said they're going to fill up the Strategic Petroleum Reserve in June. Now, why haven't they done that already when the price has gone, even we went sub 70 recently, is beyond me. But, that's giving energy a little bit of a bump. I don't know if that news is going to be long lasting. I still think oil's in a very, very tough position here. If it loses the recent pivot low from this month, oil's going to go down to $50. Now, when it gets down to 50, though, if it should it get there, that's going to be a monster buying opportunity. We'll see who's willing to step up when that happens.
All right. And gold dipped yesterday and today. What's going on with it?
Yeah, gold kind of is flat right now, but it had a little bit of a sell-off. The bigger story, though, was silver. Silver really got hit hard yesterday. That had a big, big decline. And today, silver is on the weaker side as we speak right now. So that's something I would have to watch for. But I'm hoping for silver to pull back. As you know, I'm looking to get back into silver soon. And I'm welcoming this fall in the commodity.
What do you think entry point? What is the entry point you're looking for silver re-entry?
Well, I'm thinking if it can, I forget the key levels I had. I don't have them in front of me, but what I would say is if we could get down into that $20 area, I really think that's probably a starting entry point for a long pull. And when I mean a long pull, I'm ultimately looking for silver to go into the low to mid 30s.
Okay. And you called the low at 17, and you haven't backed off up to this point. You've been very bullish on it. You think there's a consolidation here or something?
Yeah, so I think the latest run up that we had in silver and in gold was really on the back of fear. It was really on the back of the central bankers, making a bad blunder with the inverted yield curve, and all these banks, regional banks are in trouble, and they still are. Nothing has changed there. So I think now you're starting to see, because the markets have held up so much, everybody's thinking the Fed is done. The Fed funds rate is way above the 2-year Treasury note yield. So I think gold and silver just ran up on the fact that, hey, there's uncertainty out here. I'm going to own precious metals. But that is telling you what's going to go on in the future. What's going to go on in the next couple of years, everybody's going to run to a hard asset. They're not going to look to be in XYZ. They're going to say, hey, I want to be in gold. I want to be in silver. I want to be in oil. I want to be in nat gas. I want to be in wheat. I want to be something that I can take possession of. And now we're not going to totally take possession of it, but that's what things that people are going to need. And that's what you're going to see going forward. That's going to be the theme. I think we're in the infancy of those moves, and you're going to get a giant commodity breakout. That's what will take place. And we're already up on the cusp of that happening now.
Okay. So, and one other thing, Bitcoin back under 27,000, is this the beginning of the end for Bitcoin?
It could be, but I had Bitcoin making one more surge, making a nominal high, and I think that's it. So either way, there's still that chance of one more push in Bitcoin, but it's already starting to look top heavy here. So I would be very, very cautious with it. But if you get one more pop, one more, maybe just a nominal new high, I don't have the exact numbers in front of me, but that would be it for Bitcoin, if it could even do that. I'm not sure it's even going to happen.
Okay. I'm with you on that. I just seen it looking very weak. And
without a doubt, the last few weeks, we've seen so much chop, so much volatility. You're seeing that the rally that's taken place for the last couple of months is in jeopardy. And that is certainly, but a lot of times what these markets do, and not just Bitcoin, it's any market for that matter, they'll have that period and then they'll get one more move back up and they'll get everybody on board. And that's when they pull the rug out. So I would watch for that pattern, and that's what I've told my members. We're looking for that.
Okay. I think that's reasonable. All right. So let's get into a more global macro perspective. First, the banking crisis, which has really been sucking up all the oxygen in the news cycle for weeks now. I think we're on to like 6 weeks. This thing's been going on with no let up in sight. Where does it end? How does it end?
Well, it's not going to end pretty because you've already had 3 major bank failures. A lot of people are saying this is like the savings and loan crisis, but I think it's a little bit more severe. And I would be very, very careful here with these financials. Now, we know that there was a discount window opened up by the Federal Reserve, allowing these banks to stay very, very liquid. But we're seeing so much money now going into money markets, right? Everybody's running in there to get some yield. This is just not healthy. The inverted yield curve is still in place between 2s and 10s. So yes, yields have gone down. Maybe the spread is tightened between 2s and 10s, but it's still there, and it's been there for over a year. So this is a big problem. This is not going to end anytime soon. I would avoid all financials. I am not touching them. I've told my group already, we have no edge in the financial game, because what happens is, if there's really a calamity here, you're going to see the central banks. What are they going to do? A QE. They're going to cut rates. That's going to cause a rally. In fact, you could make a case that since March 13th, the markets have gone up on the expectations that the Fed is going to cut. So again, the central bankers have their nose in the business. And, honestly, these banks are not looking great. And you've seen a ton of money flood over to JP Morgan. But when I look at a chart of Bank of America or a chart of Citigroup or Wells Fargo, those 3 don't look that good. JP Morgan seems to be the only one holding up. So there's more of a problem than is meeting the eye. I'm not a good person to tell you the catalyst. I'm never good at that. I can just tell you what the charts are saying. And they're not saying anything good right now.
Right. And there was a report, I think I saw it 2 days ago, and then it disappeared off the screens, that the deposits in the major banks were down $500 billion. That's 500 billion. That's not a good indicator that all is well with the banking system.
No, it's not good. And, after we saw what happened with First Republic get bought out for nothing, right? It was just basically taken over by JP Morgan. Now we got PacWest. Now you have Western Alliance. You have so many others. It's like a domino table, right? One's going, one goes down, the rest go down. We have 4,000 regional banks, I think. We used to have a ton more. And, by the time this is over, we'll probably have 2,000. Who knows?
You think, is this setting the table for the central bank digital currency? Is that what this is all about?
Oh, absolutely. I mean, you had Christine Lagarde get pranked by somebody that acted like Volodymyr Zelensky. I didn't know if it was true or not, and apparently it's true. And she's already talking about a digital euro coming out in October that's going to have spending limits on it. Then in July, we have FedNow. So if you look at the FedNow program, I mean, thousands of companies have already signed up to that. That's basically eliminating all banks, right? Because you could just have a money transfer immediately. You don't have to do any clearing, anything like that. It's just going to be instantaneous transactions, much like it is on the blockchain. So this is all setting the stage up for central bank digital currency. I don't think the U.S. is going to roll that out immediately, but with FedNow, they'll get more and more companies involved, and then they'll start with the CBDC.
So if there's no banking sector, now going back to the beginnings of capitalism in America, the purpose of the banking sector was to allocate capital. You would deposit your money in there to keep it safe, to earn a return, and they would find worthy borrowers and basically make loans. Now that's all changed. They don't even make any money off of that stuff anymore. They make more money on fees, like bounce check fees, which some of them are getting rid of now, because there is no reason for a bounce check fee, because when your check bounces, it's all digital anyway. It doesn't cost them anything.
That's
It used to be like the clerk had to stamp it and then they had to mail it back to you and call you on the phone to make good. None of that happens anymore. So it's really, they don't allocate capital anymore. So there's the central bank just going to make loans, direct loans to borrowers. Is that how they're going to make mortgages? I mean, they're doing it now. All real estate mortgages, as a practical matter, except for huge jumbos, are guaranteed by the government. Effectively, they're making government loans.
right. And essentially, the banking system is going extinct. Just say it what it is. Nobody wants to say that. It's going away. And that's why I told my members, we're not touching these banks. I want nothing to do with them. The pattern is so bad. It's so broken. There is no reason to get involved in these names. We have no edge over that market right now. And I know some people on TV are saying, hey, the banking system is going extinct, like the way of the fake dinosaurs.
Hey, so, I was talking with my friend John Rubino about this, and, he was dollar collapse. He's really knowledgeable. I'm saying, well, maybe we'll go back to the days. So the Fed, to get you to buy in to the CBDC, they'll start giving out toasters and coffee makers
Right.
and TVs. So open an account at the CBDC account window at the Fed and get a free flat screen TV, right?
Yeah. That's, remember those days? They weren't that long ago. I know.
I remember my bar
new people. Yeah, the young people don't know those days. They don't remember those days.
Yeah, I remember, like, I got all this money for my bar mitzvah and we opened like 10 different accounts in 10 different banks. I had like radios when there were such things.
Your own Crazy Eddie. You could have started your own appliance store.
Hey, if we only had eBay, then I could have sold it. But I mean, it's absurd, but they're going to incentivize you. Maybe it'll be a gift card to Best Buy or a card accredited to Whole Foods to go buy.
Hey, look, if you wanted to get a vaccine, they gave you a free Krispy Kreme donut, or in New York, they gave you French fries, right? I mean,
right. Well, that's worth it. So, they'll be giving out McDonald's Big Macs.
Yeah, there you go.
They have to do something, right? They have to make people want to do this.
They always have a way, though, of listen, they're 20 steps ahead of everybody else. I can't think that people act like the Federal Reserve is stupid. These guys have MBAs, PhDs, mathematicians, statisticians, you name it. They got everybody at their disposal there. How could they miss this? Just like transitory inflation. How could they possibly miss that?
Yeah, well, yeah. I always say the best things in life are transitory, but like, yeah, they've got the direct data feeds from everything. Believe me, you don't think at One Liberty Plaza there in New York, which I used to work right around the corner for, they don't have a direct feed and they don't see every single unemployment claim coming in. Of
course they do.
Everything. They've got a direct feed to all data.
Everything. And something, I've watched not just Jay Powell, but I've watched all of these Fed chairmen over the years hold press conferences. And there have been times when the market is just plunging and then they could just automatically say something and turn it right back around.
They flip a switch.
They flip a switch, all right? That's like we call it in our trading room, we call it the magic wand.
Yeah.
They just wave the magic wand without anybody knowing and it goes right back up. It levitates. So, this stuff's been going on for ages. But, we're at a time now where if you're going to tell me that these so-called bankers out there with an inverted yield curve couldn't make adjustments earlier, I just don't buy it. I don't buy it. Maybe I'm just a skeptic, but, they knew there would be problems with their current investments because all they're doing is parking money. They're, like you said, they're not making money elsewhere. They're just parking money. So none of it makes any sense to me. I don't buy into any of it. Maybe I'm just too much of a skeptic.
All right. So interest rates, they're going to, well, first, housing stocks, and this is intimately tied to interest rates. They've been going higher recently, right?
They've been on a tear.
Why?
You know what? I bought puts on KB Homes, had a couple opportunities to make some money, and my put options are going to expire worthless. because they've just gone higher and higher. So it's on the anticipation that the Fed is going to start to cut rates. But they can't. They really can't cut rates because we're going to get inflation back in droves. You've got wars going on. Got a war going on in Sudan. Nobody's even talking about it. It's like a proxy war for Russia and the United States, besides what's going on in Russia and Ukraine. And then if you get China going into Taiwan, I mean, you're going to get big supply disruptions. What's going to happen with the inflation rate then? We're gonna soar. The Fed knows this. They're not dumb.
So, but maybe they're done raising for now with the whole under the guise of the banking crisis.
Without a doubt, and they can be done because the Fed funds rate is at 5%, and the 2-year Treasury note yield is just under 4%. So they, as long as they're above that 2-year, that's what the market is looking at, saying, hey, they could be done. They could cut. We got about a point in between the 2-year and the Fed funds rate. The Fed funds rate's at 5%. We don't even need a central bank if we just let the Fed funds rate track the 2-year.
Find its natural rate, right?
That's right.
There is a natural rate of interest rate on money. And we don't really know what it is because the Fed manipulates it because it's all part of central bank central planning. They're the ultimate central planners, the central banks, right?
That's absolutely correct. All you have to do is just let that so-called Fed funds rate track the 2-year Treasury note yield. Every veteran trader in the world knows that. And that's, and that's why, we can tell when there's liquidity in the system and when there's liquidity coming out of the system. Right now, there's still some liquidity in this system. And with this banking crisis, that's been the reason why we've had a rally.
Right. Yeah, because they've been priming the presses, pumping out money.
That's it.
So commodities, you mentioned new commodity super cycle. Is that for everything? All commodities? Virtually?
Everything.
So from coffee to corn to gold and silver, platinum. Yeah.
They're not going to go. They're not going to all go at the same time. There'll be different starts and fits for different things because money rotates. But they're all going to rise. They're all going to. I mean, there'll probably be 1 or 2 groups that won't participate. But you're going to see oil $200 a barrel. You're going to see nat gas go to new all-time highs in 3 years. You're going to see gold. Forget about it. Gold's going to go, to the moon. Silver too. Silver is going to go back and test, the 30s, and then it goes to its old high of 50. So, this is all in just the minute beginning stages here. But you could see the accumulation. That's what I watch. I watch these patterns and how they accumulate. And it's like a tea kettle. You put the pot of tea on the stove and the stove is burning. And then all of a sudden that tea starts to boil and then the whistle goes off and it's too late. It has already jumped.
All right. But it's a little too early for that now. How are we going to know for sure what's going to be the tip off, the indicator that you follow that says, hey, the commodity super cycle is back? Well,
it's already begun, right? So you've already had the move in silver take off already. Gold is going to do some more starting and fitting, but it's very range bound. The low in gold will be in the 1500s. That's it. That's the bottom. You're seeing it in oil, right? Oil's going to have its pullback now. It gets down to 50. That thing's taking off. Now they're not just going to jump to these high levels. It'll take time to work up. Nothing goes up in a straight line. Nothing goes down in a straight line. But it's already begun. It's already underway. And if you've been around this business as long as I have, you see those patterns. You realize that it's already started. The key is going to be, do you look for the breakouts? Or are you just willing to sit in it? But I like to trade it. So for me, it's going to be, hey, we get a high volume breakout day. That's it. That's kind of the tell that it's on. The move is on. And then you'll get pullbacks and you play those retraces. And, you continue to do that until, 2028.
All right. So nat gas has been in the cellar. I mean, you look at the chart, it is like the ultra bear market chart, like 80% loss of value. I guess going back back to, when did it hit its peak? $10.
Yeah, it hit $10. Just, what was that?
It was
I don't
recent.
have my charts in front of me, but
October, November.
they're behind me. Yeah, it wasn't
September,
that.
I think.
Yeah, it wasn't that long ago. But
Yeah.
but go ahead. I want to hear what you have to say, and then I'm going to give my comments on it.
So, nat gas seems to know the weather before any meteorologist or climate expert has a clue. Nat gas goes up, and then it's like, oh, wait a second, it's a really hot summer or it's a really cold winter. Nat gas always anticipates it. I've been watching it for 10, 15 years, and it will know when we're going to have a heat wave before anybody knows.
Markets know a lot. Markets are very, very efficient. They always know something. But here's my theory on nat gas. So we went up to 10, and that was a monster, impressive drive higher. Now we've come back down to 2, and everybody hates it here. That's the funniest thing. You were at 10, now you're at 2, and everybody hates it. So when I see something like, I'm in nat gas, I own it, I'm long. So, and I'm long, I'm hoping to be long for years. I'm hoping to be long for years. And if I get stopped out by some chance, I'm just going to re-enter lower. So I'm going to keep getting back into nat gas. But what I would say is right now, if you look at the monthly chart, you're going to notice that nat gas has made a higher low. So in the big, big scheme of things, I think that the lows were already put in. You had that run up to 10, and now we're seeing nat gas come back down and challenge the $2 level, which is what I call first leg up to 10 was one wave. You're getting your wave 2 right here. It's in the start of a 3 wave. 3 wave is one of the most powerful waves in markets. So anybody that follows Elliott wave or any other kind of wave theory, the third wave, everything comes in threes. The third wave is the big one, and that's going to last a long, long time. And I think it's in the very, very beginning of that happening right now.
All right. Well, I'm inclined to agree with you there.
And one other thing, too, seasonality-wise, natural gas almost always puts its low in at the end of the first quarter.
Right.
And
yeah, you can look back at the charts. Yeah.
And we are now in the second quarter.
All right. Well, interesting times ahead. Anything else that you're looking at? Anything else you're doing, planning? Because there's going to be turmoil. It's going to be complete and utter chaos throughout the markets, throughout the world. We're heading towards it. It's obvious. Anything you personally are doing to prepare for the inevitable?
Well, I own silver and gold coins and junk silver and bullion, and I even have some pieces on my desk right here. So, I always tell everybody, you have to. That's how you prepare a little bit. I mean, I don't think it's going to save us ultimately, but what I do think it's going to help us out for a little while. So I would definitely have some of that available. And you get a pullback, I would tell everybody, go out there and get yourself a little bit of silver. It's not going to hurt you. And if you don't ever use it, you give it to your children.
Yeah, and this is what I keep on my desk right here. So always as a reminder that that the real wealth in the world comes from the ground. I mean,
That's right.
Intellectual property has value, no question, but ultimately all wealth comes from the ground. That's
right. And, we're moving into such a wild time, Kerry, with all this AI craze, right? I mean, I can't walk 10 feet without somebody asking me about AI. And, it's almost like a hysteria. It reminds me a little bit of the .com bubble, but it's really just getting started because these computer modules, or what do you call them, artificial intelligence projects, they get smarter and smarter, right? They just keep, the more memory you give them, they can just do so many things. But in my opinion, they're never going to outsmart the man. And, we're the creation. These things are being created, and, they're still just a glorified algorithm, in my opinion. They do some incredible stuff, and they're going to take over a lot of jobs out there. I even saw a post where Wendy's is going to get rid of the drive-through guy over there answering, and AI is now taking it over. So, get ready for that paradigm shift where you're going to see a lot of a lot of jobs go by the wayside because of this new AI technology. And I don't know, where this country thinks or where this world thinks they're going to, get people to work. So you have to think outside the box now, and it might be time to own some precious metals because things could get very, very crazy in the world if you have massive unemployment.
Yeah, no doubt, and that's the big fear. Too many people out of work in China, too many people out of work in the United States, in Europe, and it's a recipe for chaos for sure. So having some precious metals is always a good idea, but especially now. And if you get in it, you can't always get in at the bottom unless you're a trader like Nick, and you can't always get out at the top. But you don't need to.
You don't need to.
So, all right. Well, hey, Nick, appreciate your perspective. We like to check in with you every so often, besides the regular show, and see your take on things. And well, interesting times ahead, as the Chinese proverb goes, may you live in interesting times. Well, we're beyond interesting here, that's for sure. And hey, make sure you go over to Nick's site, inthemoneystocks.com, link in the show notes. And hey, see how he's beaten the averages for decades. The Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Emails are welcome, kl@kerrylutz.com. Post your YouTube comments below. And Nick, we will be talking to you on Monday.
Sounds good, Kerry. Thank you.